Welcome to the Monocle Banking Podcast, where we dive deep into the world of finance, economics and policy with some of the most influential voices in the industry. I'm your host, Michael Avery, and today we've certainly got a very special episode lined up for you. So whether you're a finance professional, an enthusiast, or someone who just simply wants to stay informed about the world, you're in the right place. Now, South Africa still hasn't done enough to be removed from the greylist of the Financial Action Task Force, the FATF, the global financial watchdog. At the conclusion of a three-day meeting in Singapore a couple of weeks ago, the FATF said that while South Africa had made progress since it was greylisted last year, it still had a lot of work to do. The watchdog, which sets global standards to combat money laundering and terrorist financing, identified several strategic deficiencies that we still need to address as a country. The announcement was broadly in line with expectations, though I think very few believed we would have got off in a year. And I remember the deadline really that we set ourselves initially was pretty much 2 years, of which Treasury has certainly said it believes we should be off the grey list by mid-2025. Joining us is Christopher Malan, Chris Milan, the Executive Manager of the Compliance and Prevention Division at the Financial Intelligence Centre in South Africa, the FIC. Chris has an illustrious career marked by extensive experience and expertise in financial regulation and AML, as they call it, anti-money laundering practices. And his contributions, it's fair to say, have been pivotal in shaping South Africa's financial landscape, especially in the face of significant challenges such as the FATF greylisting. He's got multiple degrees, including a BA in political studies and Roman Dutch law, an LLB and an LLM in advanced company law and maritime law, as well as a postgraduate diploma in tax law and economic principles. Chris, it's great to have you on the show. You've studied at prestigious institutions like the JFK School of Government at Harvard University, amongst others. And in your current role, you've led key initiatives to enhance compliance and prevent financial crimes in South Africa. So I think it's fair to say this really has become your bread and butter. Great to have you on the podcast. Maybe you could just kick us off. How did you end up in this very specialized field, given that kind of background and given the kind of academic background that you pursued? What inspired you to pursue a career in this field?
Thank you, Michael, for the opportunity, and always a pleasure on my part to share where we are as a country. And you've asked me now to share about my personal situation. So going back to where it all began, I think, was in 1999. I was practicing in Cape Town as a lawyer with rights of access in the High Court, doing basically general litigation, general commercial, advising on a lot of also financial market type work, JSE, the Banks Act, anything that you can think of. Then I saw the opportunity to move to Pretoria should I be successful in the application for a newly created position, termed then the Director of Financial Regulation. And as it was explained to me during the interview at the National Treasury, they were looking for someone that had practiced, that had a broad practical knowledge, but also an academic understanding of how the financial system actually worked in practice and all the myriad of laws which the Treasury then and still have to administer, that governs basically what is now termed financial regulation, the old FSP, insurance, the stock exchange and the like, and exchange control, which was a big issue then. So I was successful then, and I joined the Treasury in 1999 as a Director of Financial Regulation. 2 years later, I was promoted to Chief Director of Financial Regulation, working with the people at that time. Obviously, the DG was Maria Ramos, the Minister was Trevor Manuel, and then Lesetja Kanyako was my direct report when I was Chief Director. From there, I then moved on to the FIC. And how did the FIC come about? Was round about the time I had joined, FIC as a concept was in a paper by the Law Commission of South Africa. They were looking into how does South Africa deal with money laundering. And they had prepared a paper and they then made the proposal to the Ministry of Finance. It then was decided by Cabinet Treasury should run with the process, and I was fortunate to be given the opportunity, my desk, to run with what then became the bill. There was a task team appointed, engage with them, work with the then Deputy Minister Mpathwa, take the bill through Cabinet and then into Parliament, consulting with a lot of role players that you still see present today. like Advocate Peter Smith, who was then at the Law Commission,
Mm.
and Article Murray Michel, you may remember him. He was then the political advisor to the Minister of Finance. So it was a group of persons that started out very much in the Treasury. And since 1999, when the Act was passed in 2001, it became operational in Feb 2003. Very much the same people then became part of the building blocks of the FIC. And once the FIC was established, I then transferred over to the FIC, where I am still at today. So that's basically how I got involved.
In a
But
nutshell.
being part of the, sort of the incubation of what we have today. Yeah.
It's an interesting timeline just in terms of the development of the FIC, because it does to some extent mirror the establishment of the FATF, which, as we know, was very much in direct response to what we saw around September 2011 and just predating that as well, the terrorist attack. We saw the Twin Towers attacked. And if you look at it, South Africa pretty much following in lockstep with what was happening in the rest of the world. Going back to that time, who would you say were your mentors or figures that had the most influence in your career and your decision to join in establishing the FIC at the time?
The mentors obviously were the professionals in the Treasury at the time that encouraged me to take on this role. And then obviously working with persons such as Murray Michel and then my colleague, Article Peter Smith, very knowledgeable persons. We sort of found that, as a grouping, we could establish the FIC from that perspective. We had an understanding which we had gathered over the years. So those were essentially the persons that I leaned upon. And obviously, from a directional perspective, the minister was very clear at that point, that being Trevor Manuel, that this was something that South Africa needed. If we were going to be part of the global village, we need to ensure that from a domestic inward investment perspective, South Africa had to position itself as a jurisdiction that people wanted to invest in and invest in with confidence. And as you can recall, in that period, 99 upward, I transferred in 2004 to the Treasury, but up to 2007, we had very much an upward growth path and we were doing fiscally exceptionally well. So, the fact that we then became a FATF member in 2023 held us in good stead. We were even given the accolade and the privilege to lead the FATF presidency in 2005, I think it was 2005, under Kokada Asmal, who was a former minister in the cabinet then. He had moved out and he was then appointed as the FATF president. So South Africa in 2005, nearly 20 years ago, was very much an influential voice in the FATF at that point in time. And at that point in time, countries that would later become very influential, like India and China, still had to be admitted as members, if I get the date correctly. So South Africa had a good role to play. And therefore it became, in the context of when I was being greylisted, in a sense a fall of grace, because our reputation was way out there. We boxed well beyond our weight. And South Africa was a credible voice in the FATF, and we would like to think still is a credible voice, even though we'd still need to dispel this cloud of greylisting.
Yeah, absolutely. And, as we know, to then be included in something that was a G7 initiative, despite being very much a developing, transitioning to middle income country, was a huge accolade. And we tend to forget those times, don't we, Chris, where leading up to 2007, we were growing at 3, 4, close to 5%. Running primary budget surpluses, and the country seemed so much more hopeful than what transpired over then the ensuing decade. I get a sense that some of that hope is starting to return with the GNU, but I want to steer clear of the politics. Maybe it's just important to get a real understanding of what it is that the FIC actually does. What is its primary role and responsibility when it comes to ensuring that we get a handle on things like illicit financial flows and money laundering and terrorism financing and corruption and that kind of thing? How does the FIC give effect to this?
Thank you for that. It's a question which requires some reflection and a detailed response. I'll try and be brief. The way you've got to look at it is that every country under the FATF regime, the linchpin or, the fulcrum of their regime is the FIU. the Financial Intelligence Unit in South Africa called the FIC. The reason being is that the entire edifice of the FATF recommendations and the compliance that they require from the private sector and the activities of law enforcement is predicated on the notion of the detection of suspicious transactions happening in the regime or the jurisdiction. And for that, previously there were various models where certain government agencies started to develop the capability to receive suspicious transactions. Then the FATF regime required there to be an FIU in each country that would be the fulcrum, in the sense between the private sector and reporters of information into the FIU. The FIU's function was then to make sense of these statutory reports or regulatory reports pertaining to suspicion and unusual activities. The FIU was required to apply its judgment and analytics to sift through this report viewed against the backdrop of its current and growing database of previous reports, engage with the tax side of it insofar as they had the tax information, then compile a product which is called the intelligence product. And that is the intelligence product we then hand over to the investigating authorities. First and foremost, the police, the SIU, the Revenue Service, and thereafter the value chain then, once they've done the investigation, prompted by our leads, our intelligence leads and our analysis, there is an investigation which matures into an investigation you can take to court, and then you then prosecute it through the assistance of the prosecution service. If you see, the FIU, the FIC in South Africa, sits at the heart of the regime, and we have over the years used the term internally that we are the glue that keeps the regime together. And you'll see in the formative years, a lot of the coordination was driven by the FIC because we had to, in the formative years, build up the relationship on the private side and on the public side, create partnerships and create efficiency and effectiveness, which means we had to pull everybody together under the FATF banner. The FIC actually led the FATF delegation for many a year. The Treasury came into the picture once we had gone through the final 2021 report to get us out of the grey listing. But very much it's been an FIC coordinated situation. So that's the role of an FIU, generally speaking, in the country. It's to receive suspicious transactions. And if there are other reports that are filed, in South Africa, we have cash reports as well over a threshold. We have recently introduced international transfer transaction reports. We also have terror property reports. Utilizing all that information in our database, analyzing it, trying to link the dots, as former Minister, Godan used to say, link the dots using our database, provide a credible product which law enforcement can take that baton. And you have mentioned in the previous groups, I recall, the baton being handed over. In that sense, yes, we hand over an intelligence product, and then it's for law enforcement to make, the most of it with our assistance.
Thank you. It's a very insightful overview of exactly the role that the FIU or the FIC, as it is in South Africa, plays. I'd just like to get a better understanding of the importance here of partnerships and collaboration in this. And you're correct, I did use the baton analogy of a 4-member relay race, to which you said it's probably a bit bigger than that. It's probably 8 lanes that we're talking about here in terms of how many role players we have. But how important is it for partnerships, proper partnerships between yourselves and the prosecuting authorities? And I phrase this question just in the context of where we've seen successful prosecution of high-level, sophisticated corruption in South Africa was under the years when the SIU had this ability, all housed under one unit, to both be investigator, detective, and prosecutor all in one. And it was a very effective model. How much do you collaborate, for example, with the prosecuting authorities when it comes to compiling a product that you then hand over?
When we engage with the NPA, if we just use the NPA broadly, our first port of call is with the asset forfeiture unit. And the reason being is that in this whole regime of anti-money laundering, terror financing and proliferation financing, the idea is to try and detect the wrongdoing, the transactions relating to the wrongdoing, the persons or entities behind it, and then to go and seize the the proceeds of crime as soon as possible. And that is what we call the disruption of the proceeds of crime. We remove the profit out of crime. We take the profit out of crime by going and seizing the proceeds that are sitting in bank accounts and the like, and where assets are purchased, work with the AFU to go to court. And invariably, when they go to court, they would have gone to court on the basis of an affidavit that the FIC would have prepared that shows the flow of funds, how money moved from A to B through what processes into persons' bank accounts, entities' bank accounts, assets bought, assets sold. So that whole where we built a very strong relationship in the formative years and still do have a very strong relationship on the asset forfeiture side. Just to reflect that, how did that aspect pay out in our mutual evaluation report? We got a lot of good credit in our 2021 mutual evaluation report on asset forfeiture. The problem was that it was not sufficient to follow funds that have left the country. And that is where we received a lot of criticism that we were not able to follow funds that left the country. So asset forfeiture was our primary go-to in order to disrupt crime and to seize assets. Over and above that, we needed to build strong relations with the Revenue Service because many of proceeds are, because they're proceeds, they also can be deemed to be income and taxable. So there's a school of thought that says money laundering proceeds and tax are two sides of the coin, depending how you look at it, because invariably countries around the world, the Revenue Service would go and tax and also seize, the proceeds of crime as income, ill-gotten, even though they may be. So we then built a strong relationship with the Revenue Service. Over and above that, we then looked at the investigative chain, building with the Hawks and other agencies, SIU. And that was very much the story up until the time that we had the issue of state capture, when we found that it became challenging because we were sending, reports out into the marketplace and we were not getting feedback. Now, when you build the relationship, you've got to have a feedback chain where the recipient of your information tells you, that is what I have been able to do with it. I need further information from you. Can you help me? I'm stuck in this area. So it's not just building the relationships, it's also building the feedback loops. So fast forward to, let's talk about the COVID era as a good example.
Yeah.
And when COVID hit us, we anticipated that we were going to experience perhaps a lot of abuse and misuse of procurement and procurement fraud, whereby monies that were meant to buy all the PPE and all the paraphernalia to combat COVID, like gloves, syringes, whatever, masks, etc., would not find its way and tenders would be awarded. We then established a special concept called the Fusion Center, and it was a mechanism we had conceptualized in then the ACT, which was the anti-corruption task team.
Task force, yeah.
So all the government agencies came together and met very regularly, and that came out of the whole issue about when the Scorpions were disbanded, there was another anti-corruption forum then established that sought to fill the void. We worked with that committee to develop the Fusion Center, where these partners met at the FIC premises, and we created the capacity to deal with important issues in a coordinated manner. Another example of a partnership. We then formalized that into a partnership, which then became a public partnership, and we applied it when COVID struck. And you would see in previous FIC reports and reports of, the SIU and other arms of government, we achieved tremendous success in curtailing and recovering funds that were mismanaged and stolen and pilfered during the COVID years. So that was one mechanism that worked very well. We then, in consultation with just what was happening in the international terrain, we then decided to create another partnership, which we called SAMLAT, which was the African Anti-Money Laundering Integrated Task Force, which was a grouping of the banks, essentially, because they were the major reporters. So we had then created another, and this was a public-private partnership, where the major reporters, being the banks, came together in a grouping with ourselves, the Reserve Bank as the regulator, with BASA and with SABRIC. We formed this partnership, and I was privileged to lead that engagement as well, from structuring the strategic plan and how to go about setting that up, where we basically moved towards a mechanism whereby we were talking about how do we truncate the value chain, shorten the value chain from the discovery of a suspicion in a bank to actually it becoming something that we can move on to take asset forfeiture proceedings, or we can move it into the criminal investigative space, or to SARS. And the whole purpose of that was to educate the banks, bring them into a working group, and we created working groups. And one of the most successful working groups was the Wildlife Working Group, on which we did tremendous work and became world renowned, that we became the leader of sort of analyzing the value chain in wildlife and how wildlife proceeds were being abused. And we delivered an excellent paper that toured the world, and we spoke in various jurisdictions about that. So it shows you, once you can get a grouping of the banks together with us, we are then able to target. So what was the difference? The difference was previously banks were sending to us suspicious reports, and that was just based on their own observations and detections. Now we created an integrated task force whereby we would put issues on the table. And that is when the public-private partnership became an excellent assist to the Fusion Center, which was the public arm. And we applied it in the post-COVID years, where we're saying we are targeting A, B, C, D, E. We now put targets on the table and send the banks back and say, go and find information about this. And we then found that we had a more nuanced and coordinated approach. And we got solution quicker. With greater depth, because they were then charged to go and, in a sense, find and analyze connections we were looking at or for. So at the end of the day, where we definitely see the FIU becoming more effective is developing these partnerships in South Africa. And over and above that, we also need partnerships on the privacy issue. The privacy issue is a huge issue. In the EU, and in FATF, they have this tension between privacy and the anti-money laundering terror financing rules. We are building that partnership in South Africa under the leadership of the National Treasury with the information regulator. We will be concluding MOUs there. So as you can see, there are concentric circles of relationships and partnerships that need to be built, managed, and then effected so that they deliver output, and all together this complex web of partnerships can make the system more effective and efficient. One last link I may add, just for completeness, is that we were also then looking at, coming out of the mutual evaluation report, the ACT principles and the FIC agreed that we have a problem in pursuing high-impactful, high-end, complex matters that were related to commercial crime and corruption. And the gap we analyzed to be a gap in forensic capability. There was no state forensic capability in existence that serviced the need of the anti-corruption grouping of partners within the ACT, which, as you know, is all the law enforcement, the National Treasury. It has a SARS in it, it has FIC in it, and it has, a grouping of agencies which seek to deal with these sort of issues of corruption. We found that the state was employing private sector to do the forensics on SAPS matters, on SIU matters, and there was a lot of duplication. It was not efficient, and we were getting long to the point of bringing those matters into court, because you can only take a matter into court with good forensics. We then created the capacity, and it was signed off that the FIC would create a forensic unit, which we established in April last year, and we're busy with fleshing it out. We're in consultation. The purpose of that is to service the new formation of the ACTT. So we then become a shared forensic service. And we hope once that is up and running, we'll be able to tackle the creation of court evidence through a forensic process quicker and start to work on the corruption cases that's still outstanding. So another example of partnerships. I'm trying to, Michael, and thank you, just to explain to you the complex set of relationships that are in place if a regime is going to be effective.
No, it's absolutely critical that we give this issue full ventilation in South Africa in the public square, because we're talking about what must be one of the most mission-critical goals and objectives if we're to turn South Africa around, and that is to deal decisively with corruption, with the proceeds of crime, and to ensure that crime doesn't pay and that we're not a haven for money laundering or terrorist funding. And it's absolutely critical. I still have some reservations around the way the government has implemented the Glenister judgments, in which it was quite clear that we needed to establish something in the wake of the way the Scorpions were detailed, so to speak, and neutered, and establishing a new body that enjoys Chapter 9 kind of protection, very much in the way Paul Hoffman of Accountability Now advocates for. But it's very encouraging to hear the work that the FIC has done in deepening and strengthening these public-private partnerships and ensuring that we address these deficiencies that were identified by the FATF. Maybe just on that, on the progress, we have made considerable progress in addressing the FATF's action plan. What are some of those key milestones that were achieved, and critically, what remains to be done to ensure that we get South Africa off the grey list by next year?
So let's start with the timeline, which we and the Treasury has done a lot of communication about. So you hear about the June 2025 timeline, and yes, you are correct. There was anticipation that we would get off the grey list earlier. The idea here is the FATF process of working yourself off the grey list involves, and here we come to the 8-lane issue in South Africa. We've got 8 strategic issues. So 8 lanes, in effect, needs to move towards a certain timeline. So technically, what is that timeline? That timeline is January 2025. And that date is the date where the joint group, which is a review group of the FATF, made up of our peer countries and really our regional body, Ismlag. There is a special review group that is set up to look at each country's progress. They give you an action plan. Now, the last date in the action plan for South Africa is by January 2025. That January 2025 is the date that is the last technical group meeting of the joint group that's going to review South Africa. So that's where you read January 2025. However, should we be successful on all the 22 items in that meeting, they then write up a report. It goes to the plenary of the FATF in February. The plenary in February reads the good news, and we are anticipating we will have good news. In February, they say, we are pleased with the progress of South Africa. We then grant permission for an on-site team to be sent to South Africa to review the good work that has been reported upon. That review team comes out to South Africa approximately a month later. So we now February, March, April. They come out to South Africa and they review all the 22 items. They interview private sector, they interview law enforcement, they interview every player that would have made input into what we say we've done,
Right.
including stakeholders. It's sort of a mini mutual evaluation, but this is more serious. This is now the team that's going to review you to say, you've written to us in theory, we've reviewed you in theory, we're coming now to the ground to test what you've said. All things being equal and all things being well, we then get a positive report, we trust, from that review group, which then is, and we engage on that. We will be given an opportunity to engage, to ask questions, to answer questions. That report then gets submitted to the June plenary of the FATF 2025. And it will be that meeting of the FATF in June 2025 that will make the final decision. As you've heard now, in the previous one, 2 countries exited. We hope that in the June plenary of 2025, South Africa will be exited and the plenary will endorse the exiting. South Africa is removed from the list. So that's just the process. Coming back to the issues, the Treasury has released a very important document on the 2nd of July. The media statement, it's out there. I will just summarize that. From the Treasury document, we note that we still have to address 14 remaining action items. Now, we need to be very clear here because there's also sometimes misunderstanding in the public space about this. The action item is a tiered action item. So there are 8 lanes, but each lane has different expiry dates. So if we just take one example, IO2. IO2 is on international exchange, mutual legal assistance. It had an expiry date of May 2024. In the supervision and enforcement space, there are several timelines, stretching all the way to 2025, September 2024. So each and every one of them has a timeline. So we've got 14 hurdles to jump over in each lane, more or less. And they are the September report for the September joint group. And then the last joint group is the January 25 working group. So you'll see in the Treasury statement that we've only got 2 cycles.
Yeah.
We've got cycle now, September, and the cycle January. Those are in effect proxies for, we have a September meeting of the joint group, and our final joint group meeting is in January 2025. So 14 items, they have set them out in there in summary, essentially what has been our achievements now in January, which came off the list now in the recent June 2024. We made progress on supervision. We were very pleased. It was a tough issue. We had to design and implement risk assessment tools. You would have heard in the newspaper and in the press about RCR, where we were in certain sectors. Now we were given the thumbs up to say you have demonstrated progress, but it's not full progress. So you'll be hearing from us that even though it's largely addressed, it's not addressed. So we'll still be putting a lot of emphasis in the market, particularly on lawyers and estate agents and all the other sectors that need to send us still RCR information. We want to get that number up to a high number of compliance, close to 90% or more if we can, before the January 2025, so we can argue that we've done more than enough for this to be fully addressed. That's where we would want to be. We also made progress in the legal provisions about criminalizing, terror financing and the targeted regime. The increased use of FIC intelligence, there was an issue that law enforcement had to use. As I explained, the FIC produces intelligence products. There had to be greater utilization of that, and we were given an uptick that there is increased usage of that at this point in time. So still a lot to do. It's going to be a very challenging from the perspective of marshalling all the resources between now and effectively, I would say, November, because by November, our report for January must be done.
Yeah.
So it comes with lead time. So even though it's January 2025, technically the document right up as at end of November. So if you think about it, we've only got a few months. And that's where the pressure is on the SA authorities. And the challenge is to still, within the remaining months, get everything in place, documented in a cogent form that we can demonstrate on paper that we've made the jump.
And a lot of that is just awareness and education and partnering with estate agents, for example, to reinforce the importance of filing a risk and compliance return, that so-called RCR questionnaire. It seems administrative, but we need everyone to play their part in this 8-lane relay race to build on your analogy there. Just lastly, I've got to ask you, Chris, all things being equal, let's say we do manage to get off the grey list by that June 2025 meeting. There still feels like a lot of work that needs to be done to ensure that we continue to work to free South Africa from the albatross of corruption that weighs so heavily around the economy's neck. Just lastly, what would your vision for a corruption-free South Africa entail from where you sit as the FIC? What would you like to see us focus on to really say we're taking corruption seriously and we can finally start to not only repatriate ill-gotten gains, but start to see those who are certainly found guilty of corruption spending time in jail?
Well, there are several observations you can make as to what would be the ideal scenario, but if we link it directly to the action plan and grey listing, we would have demonstrated by the action plan that we've got what we call the fundamental building blocks in place. We now need to demonstrate sustain, and that's just the big issue for the FATF. They want to see that our deficiencies have been remedied by a strong foundation across these 8 odd lanes and 22 action items, and upon which we are building sustained activity, whether it be in the generation of intelligence, the seizure of assets, the investigation of criminal proceeds, the detection of terror financing, proper reporting, proper statistics, in the engagement in the mutual legal assistance arena. It would be a great positive if we could start to get certain people that should be extradited back to South Africa to have their day in court on the proceeds that left through their facilitation, those sort of matters. And then most importantly, continue building on the sustained foundation. So very loosely put, if we can manage that, it ought to, with all these areas, and they are interlocking areas, working well. We've got a stronger foundation now. It should mean, in theory, that our ability, and the issue is our ability to detect, our ability to close gaps. Also, there needs to be, obviously, on the governance side, tighter accountability for state funds, ensuring that through our state procurement office in the Treasury, we can manage the whole procurement process better. Beneficial ownership also kicking in. We are able to discern who are the natural persons and actually control companies that are registered at SIPC, so that when it comes to transparency, we can look through very clearly a maze of corporates, with some effort obviously, to really, through the transparency leg, to know who is actually behind this set of institutions or companies or structures that is abusing the state. So with all those mechanisms working well, it should create a layer of countermeasures or preventative measures and ability to be effective once detected that sorts to remove the space for corruption to occur. Alternatively, if it does occur, give us the ability to get quicker at the issue, find out who's behind the issue, detect the funds, seize the funds before the funds leave South Africa. That's first prize.
Yeah.
Once they leave a country, it's exceptionally difficult to pursue it. And that's a worldwide phenomenon.
Yeah.
Best as I can summarize it on how what we're doing now for the grey listing can stand us instead, and hopefully make a regime effectively that starts to work as it should and be averse and hostile, we hope, to money laundering, corruption and abuse.
That's a mission that I'm sure all law-abiding South African citizens can rally behind and certainly support you in those endeavours. That brings us to the end of another insightful episode of the Monocle Banking Podcast. I hope that you enjoyed our deep dive into the world of financial intelligence and regulation with our distinguished guest, Christopher Malan from the Financial Intelligence Centre. Chris, those insights into the complexities of all the financial compliance and the journey to get South Africa off the FATF grey list have been truly enlightening. Thanks so much for sharing your expertise and your time with us here on the podcast. Take care.
Thank you, Michael. Take care as well.
Well, to our listeners, thank you for tuning in. If you found this episode valuable, please be sure to subscribe to the Monocle Banking Podcast on your preferred platform and leave us a review. Your feedback helps us bring you more high-quality content. Don't forget to follow us and also look out for updates on future episodes and behind-the-scenes content. You can find us at the Monocle Banking Podcast, as I said, on all good podcast platforms. I'm Michael Avery, and you've been listening to the Monocle Banking Podcast.